The start to 2026 shaping up to be anything but quiet. Renewed geopolitical tension, more tariff threats, and questions about the new U.S. Fed chair. Let's go to Andrew Vuk. He's investment advisor at Wellington Altus Private Wealth, joining us now. Thanks for your time.
Thanks for having me, Marilla, and Happy New Year.
Same to you. Weakness in the European markets with Washington threatening the new tariffs for Europe. What sectors are going to be affected by this?
Well, I mean, I think you look today, and autos certainly were the ones taken to the ringer in Europe, just given that's one of the number one imports kind of in the European Union that the U.S. consumer takes. I think we're looking a little bit more broadly at this, though, in terms of what other factors and facets we see here. Trying to connect the dots, we look at the whole bloc, the European Union. It's 500 million consumers, and given the fact that we're talking about these anti-coercion, instruments that they have use of, that could potentially, really hurt a lot of American companies. We were gathering some data from FactSet, and 42% of all S&P 500 companies draw their revenue from outside of the U.S. borders. Not surprisingly, tech takes 56% of all revenues from internationally. So, I mean, I think there's one aspect here where, European companies and manufacturers could get hurt, but, you got to look no further than U.S. companies and corporations as well have something to lose here.
Okay. Is this something you think that investors need to focus on, or is it noise that you think will pass?
I mean, the past year has been kind of a playbook to go by. It's noise, but it's constantly there, right? We say to investors, don't be a long-term investor one day at a time. I'm sure we're going to be talking about this for the better course of this week and next before we get some, juicy earnings from tech companies in a couple of weeks. But with that being said, it's still critically important, right? I don't think Trump's going to march into Greenland. It'll probably push to buy it, whatever that looks like. But this does have big ramifications, especially with the EU. They were planning on voting on that July deal that was struck with the U.S., and now that's on pause. So tariffs now coming back to the forefront, and people have recency bias. Look no further than Feb, March, and April of 2025. Markets took a pretty good licking with tariffs in the forefront.
Okay, so we are into earnings season right now. What's your take on what you've seen so far?
Well, so far, we've been a little bit surprised just at, how stretched things are. I mean, I think we're going to get a lot more reports coming out in the coming weeks. Like I said, tech is really going to dictate where the market goes. We're quite surprised when we look at earnings surprises. So, I mean, below historical averages should be, kind of high single digits. Companies that have reported so far have only had surprises in around 6%, and that's come down quite substantially. What worries us a little bit more is I think a lot of people, analysts, market participants are really hoping 2026 is the year of earnings growth or kind of earnings expansion to continue this run we've had. And when we're looking at PEs on the S&P 500 of 22, which are well above historical averages in the 18 to 20 range, it gives us pause. So we're looking to get a little bit more defensive, Marilla, as we go through earnings season. We're going to be really interested. We've got 3M, Abbott, J&J, some big kind of durable consumer companies there, and healthcare. We're really liking these kinds of sectors, consumer staples, healthcare, to just shift client portfolios out of that tech overweight that we've benefited from the last couple of years.
Okay, so we've saw the rotation of money start sort of at the back end of last year, continuing to the start of 2026. You mentioned the sectors you like, and I know there are a couple of specific stocks along those lines. Global Health, the ETF, is one. Tell me about it.
Yeah, so we really like IJX, and as I said, I mean, you got the Eli Lillys of the world and Novo and really benefiting from the weight loss drugs. UNH seems to be turning a corner. For a very long time, we've been really good asset allocators, and we've said to clients, listen, if you don't want to get kind of stuck picking a stock at a high, why not buy the broader healthcare sector? Healthcare has been a bottom quartile performer in the S&P 500 for the last 3 years. Everything mean reverts. So we do think, given everything going on with tariffs, people looking at really stretch valuations in financials and tech, that something like that ETF would be a great diversifier for many client portfolios.
Because we've seen an upturn, I mentioned at the start or at the end of last year, this one's at 98.87. You'd still put money in here?
Still would, right? I think what you're looking at here is even with the uptick, everything, you kind of have to take a relative lens on. So the performance was not there, 22 to 25 relative to the broader S&P 500, and we really think if you want to put a dollar somewhere where it's going to be a little bit more protected and not have as many of these potential headwinds that tech does, it's a great way to diversify.
Okay, let's get to another of your picks, Invesco Equal Weight S&P 500 ETF. Tell me about that one.
Yeah, absolutely. And we've been talking about this one on the show now for the better part of a year. Really interesting trend that we're seeing going on with the equal weight trade. It's really paying dividends, to use the punter analogy. For the last 3 months, Invesco, aside from Google, has outperformed not only the S&P 500, the equal weight Invesco that is, but also the other Mag 6 names. So as you're starting to see this rotation and people pressing pause on tech, and you're buying those other 493 names that represent an equal proportion of the U.S. market, you're getting a lot more diversity there. And, back to my earlier comment just on earnings season here, we really hope we start to see some better market breadth from different sectors, and equal weight would definitely benefit from that.
All right, Andrew Vuke, so I got to leave it there. Thank you very much for joining us today. Appreciate it.